I'm Annemarie Drosos, reverse mortgage specialist, and I'm here today to talk about the most common myths associated with a reverse mortgage. Myth number one is that the bank or the lender owns your home, and this is not true. You retain title to your house the entire time, even if your house is in a trust. You never lose title to your house. So myth number two is that the reverse mortgage requires that you make monthly payments. That is not true. You are not required to make a monthly principal and interest payment. You can if you choose to, but you are not required to. You are required to pay property taxes, homeowners insurance, and homeowners association fees if applicable. So myth number three says that the children or the heirs will be held responsible for repayment of the loan. So if the heirs actually have three choices when the parent passes. They can either sell the house, pay off the loan, and they get the remaining equity. They can refinance the house and pay off the reverse mortgage, and then take ownership of the house. Or they can also just hand over the keys and walk away with no recourse to the heirs. Myth number four is that the home must be free and clear or completely paid off. That is not true. It really depends. When figuring out how much you can get from the reverse mortgage, it's always by the age of the youngest borrower and the value of your house. So once we know that, if there's enough money there, then yes, we can pay off a mortgage as well. Okay, another myth number five, might be that the lender possibly just wants to take your home or sell your home. That is not the case. You are allowed to live in your home until you leave the home for longer than a year, or you pass away, or you decide to sell. So you can stay there as long as you want. You're safe in your house. So myth number six would be that possibly there's not enough equity left over for your heirs. Reverse mortgage, home equity conversion mortgage, only uses a portion of the entire value of your house. So in the beginning, you're only getting a small portion. If there's any equity left over at the end, which there could very well be, because you also have to take into account your home increasing every year, and FHA guesses it'll be a 4% increase annually. And depending on how much you use of the balance of your house and the equity that you have, there could be equity remaining once the payoff demand has been paid in full or the loan has been paid off. The remaining equity does go to the heirs. So myth number seven could be that perhaps you think that once you get a reverse mortgage, you can't sell your home. That is incorrect. You have full rights, full ownership rights of your house, whether you have a reverse mortgage or a forward mortgage on your house. If you choose to sell because you want to be closer to family, or leave to find a different home, space to live, whatever you choose to do, you can sell your home at any time. So myth number eight would be perhaps if the servicer changes, then the loan changes. Note that the HECM mortgage was created by Congress, it's insured by FHA, and it's backed by HUD. If for whatever reason your servicer changes, everything, your line of credit, loan balance, everything stays in place with no upset to you.